Hello students, welcome everyone. This is Professor Amit Mishra on behalf of JK Shah classes, and today we are going to discuss CA Inter RTP for November 23 examination. Just like in every attempt your institutes issues RTP, for November 23 also they have issued an RTP in which in the first line itself they say that our module which we have given to students is of September 21 edition. September 2021 edition. So therefore we are covering all the amendment post September 2021 till 30th April 2023. So basically this supplement covers all amendment with respect to your syllabus from September 21 onwards till 30th April 2023. Now talking about amendment, there is no as such a huge amendment or big amendment which is going to affect your answer materially, but since they have issued RTP, I will be discussing all the amendments one by one so that you will be in comfortable position to attempt the question paper in your exams. Apart from that, I will also be discussing questions and answers which are given at the end of the RTP. Okay, so first going with amendment, we'll go chapter wise. In chapter 1, that is preliminary, there is only one single amendment. I repeat, in chapter 1 preliminary, that is only one single amendment over there, and that amendment is your small company. The changes in small company limit, as you guys already know, that for small company paid up share capital is 4 crore rupees and turnover is 40 crore rupees. This is the first amendment. This is the first amendment where paid up share capital is how much? 4 crore rupees and turnover is 40 crore rupees. I repeat once again, paid up share capital is 4 crore rupees and turnover is 40 crore rupees. You all know this. We have already discussed in our regular classes, but still they are again and again giving same amendment in every RTP. It was there in May 23 also. It was there in November 22 also. Okay, no worries, we'll still discuss. So for small company, paid up share capital should be maximum 4 crores and turnover should be maximum 40 crores, and you all know that 4 crore can be extended till 10 crores and 40 crores can be extended till 100 crore, but as of now present limit is 4 crore and 40 crores. If tomorrow government plans to increase the limit, so 4 crores can be extended till 10 crores and 40 crores can be extended till 100 crores, but as of now limit is 4 and 40. Easy, simple. This was the first amendment, 4 crores and 40 crores. So chapter 1 is done. Now coming to chapter 2. In chapter 2 again repeated amendment. I have discussed this amendment in RTP of May 23 also as well as November 22 also, but still again and again they are giving same amendment. If you closely see section number 16, I repeat, if you closely see section number 16 of your syllabus which talks about rectification of name. I repeat, section number 16 which talks about rectification of name. Now just to give you a little background, section 16 contains provision. Section 16 says that if the name of the company is same or similar to the name of any existing company, or name of the company is same or similar to an existing trademark, name of the company is same or similar to the name of an existing company, or it's similar to someone's trademark, then in such situation, central government will order company, central government will order company to change name. I repeat, central government will order company to change name within 3 months. Within how many months? 3 months. Within how many months? 3 months. So when central government feels that name of the company is same or similar to name of another company or trademark of any other registered proprietor, so in that situation central government will give order to company to change the name, and company should change them within how many months? 3 months. Now there can be two situations. One is company changes its name, and the other one is company does not changes its name. Okay, fine. Okay, so central government will give order to company to change the name, and company shall change them within how many months? 3 months. Within 3 months. Now if company changes its name, company should inform to ROC, and ROC will give new certificate of incorporation. And if company fails to change their name, despite central government's order, company fails to change the name, then in that situation, central government will itself give new name to the company. New name to the company. I repeat once again, central government will give itself new name to the company, and if in future company is not liking the name given by central government, because central government may give any name to you and you will have to accept that. But if you are not happy with the name given by central government, then you can yourself change them. That is, company can change its name given by central government. Simple, easy, done. This is section 16 for you, that name of my company is same or similar to name of existing company, or same or similar to trademark of existing registered proprietor. Okay, easy, simple. So in that case, central government will order company will have to change name within 3 months. If company changes name, they will intimate to ROC. If company does not change its name, then central government will themselves give new name to the company. And if company is not liking name given by central government, company can themselves change the name. Easy, simple. Now, earlier 2-3 attempts before, it was 6 months over here. Old provision was, it was 6 months over here, which has been amended to 3 months from last 3 attempts. But again and again they are giving same amendment to you. Don't worry, JKSC students, you have been taught amended provision in your regular lecture. So you need not make any changes in your textbook. See, as you can see, JKSC textbook is with me, and non-JKSC students who have their material with them, if there is 6 months, I don't think it will be, because everyone would have taught your amended provisions to you. But still, if in someone's book it is 6 months, please make it 3 months. Please make it. Earlier it was 3 months here and 6 months for trademark. But now they have made 3 months in both the sides. Plus, central government will give you new name on their own. Easy. This was amendment of chapter number 2. That's it. This was amendment of chapter number 2. Okay. So one is done. One talks about small company, 4 crore, 40 crores. You already know. Chapter 2, section 16, rectification of name. If name is same or similar to any existing name or trademark, then you will get 3 months to change your name. If you change, very good, ROC will give you new certificate. If you do not change, then also central government will give you new name and ROC will issue new certificate. But you don't like the name given by central government, you can always change your name as per section 13, alteration of name clause, if you remember. Okay, simple. Now, coming to chapter 3, very small amendment, very small amendment. You guys already know private placement. Section number 42, guys. Read with rule 14 of Companies Prospectus and Allotment of Securities Rule 2014. So section 42, rule 14. Section 42, rule 14. Now, as you all know, private placement is issue of securities to particular person or particular group of persons. Yes or no? Where private company issues private placement offer letter to investors, to selected persons, which we call as identified person. Yes or no? And then those identified person invests money in company and company gives them security. Company gives them what? Securities. Yes or no? See, there are 2 ways to raise to issue securities. One is private placement and the other one is public issue. I repeat, one is private placement and the other one is public issue. Yes or no? In private placement, companies issuing securities, companies giving invitation to particular person or group of persons. Now the amendment over here is that no offer or invitation of any securities under this rule shall be made to a body corporate incorporated in or a national of a country which shares a land border with India, unless such body corporate or the national, as the case may be, have obtained government approval under FEMA non-debt instruments rule 2019 and attach the same within the private placement offer cum application letter. Now sir, what is this amendment talking about? See, very simple. Say for example, name of my company is Reliance Industries Limited. Now I want to make private placement. And if I am making private placement to person or a company which is from that country which is sharing land border with India. which is sharing land border with India. Okay, now imagine India's map. If I'm imagining India's map, the country which shares land border is Pakistan, Nepal, China, Myanmar, Sri Lanka. Yes or no? So our neighbor countries, So if we want to make private placement to any person, any resident, any national or any body corporate which is from that country which are sharing border with India, sharing land border with India, sharing what? Land border with India, then in that particular situation, we'll have to first obtain approval of central government. We'll have to first obtain approval of which government? Central government. Say for example, Reliance Industries Limited is making private placement offer letter. They're giving offer to me. They're giving offer to me. Yes or no? So if Reliance is giving offer to me, then in that particular situation, does Reliance need central government approval? In that particular situation, does Reliance need central government approval? The answer will be no. This is normal private placement. But if Reliance is issuing private placement offer letter to a person, to an investor from China, say Mr. Chin. Mr. Chin. Now, Mr. Chin is from China. So, in that particular situation, before making offer to Mr. Chin, Reliance Industries Limited will have to obtain CG approval. Obtain whose approval? CG approval under FEMA Non-Debt Instruments Rules 2019, and then only we can make offer to that particular person. See, the main motive of government through this amendment was to target investors from Pakistan and China, because you all know the diplomatic relation of India with Pakistan and China are not that good. Yes or no? So, for entertaining investors from Pakistan and China, for issuing private placement offer to them, first we'll have to obtain approval of our central government. If central government says yes, then we can do so. Otherwise, we cannot proceed with private placement. Easy? Simple? Okay. So, relevant amendment of third chapter done. See, this amendment as such is not material for you. Okay. So, 3 chapters done. 3 chapters done. Okay. So, what are the amendment up till 3 chapters? So, first is small company 4 crores 40 crores. Second one is rectification of in section 16, where they have changed 6 months from 3 months. From past 3 attempts they are saying same thing. And if company does not change its name, then central government will themselves give new name. Okay. So, first 2 amendments we already cover in regular class. Third amendment is we cannot issue private placement offer letter to that particular person or body corporate or company which is from that country which shares land border with India. Say for example, Pakistan, China, Nepal, etc. Okay. Now, there is no amendment in chapter 4. No amendment in chapter 4. Coming to chapter number 5. Chapter number 5. Acceptance of deposits by company. Acceptance of deposits by company. Now, you need to understand that every company who is accepting deposits, from public or members, or I can say if a company is accepting deposits from member or public, then such company shall follow section number 73 to 76A plus companies acceptance of deposits rules 2014. Yes or no? Easy? Done? Now, imagine a situation that my company is accepting deposits. And my company follows these rules. Because without following rules, I cannot accept deposits. As simple as that. So, my company is following rules. So, now such company shall file return of deposits on or before 30th June of every year in form DPT3. Yes people, yes. Every company who is accepting deposits and following rules of deposits is required to file a return of deposits on or before 30th June of every year and the form in which return is to be submitted is form DPT3. Is form DPT3. Yes or no? Yes or no? So in form DPT3, we will file all those details of deposits which is outstanding till 31st day of March. 31st day of March of that year. Correct? Now. This return of deposit should be audited. Should be what? Audited. Okay. This was your earlier provision. That company will file audited return of deposits on or before 30th June of every year in form DPT3. In form DPT3. Yes or no? Now, the amendment that they have made is, they have just added one more line. The line is, and a declaration to that effect shall be submitted by the auditor in form DPT3. That means, in form DPT3, auditor will specify that he has audited the return of deposit. He has audited the return of deposits. Yes or no? He has audited the return of deposits. Yes or no? That is the amendment which we have in chapter number 5. Nothing new. Okay? Simple, easy. Just to summarize, that if company is following the rules of acceptance of deposits, then company will have to file a return, audited return of deposit in form DPT3, and in DPT3 auditor will write expressly that yes, I have audited the return of deposit of the company. Simple. Auditor just has to add his confirmation in form DPT3 that yes, he has audited form DPT3. That's it. Simple, easy, done. Okay. So 5 chapters over. 5 out of 10 chapters are over. Simple, easy, done. Achha, just to summarize one more time, just to make sure that you don't forget. In first chapter, amendment is only small company 4 crore 40 crores. In second chapter, rectification of name section 16. In third chapter, we cannot make private placement to any person who is from that country which is sharing land border with India, except with the previous approval of central government. Okay. No amendment in chapter 4. In chapter 5, one line has been added. Then in DPT3, that audited return which we will file, auditor will give a declaration that yes, he has audited form DPT3. Simple. Now in chapter 6, registration of charges. One simple amendment, it was there in last RTP as well. It says, nothing contained in this rule shall apply to any charge required to be created or modified by a banking company under section 77 in favor of Reserve Bank of India for any loan or advances made to it under section 17(4)(d) of the RBI Act 1934. So instead of reading subclause 4, clause 4 of section 17, I'll directly say section 17(4)(d). Section 17(4)(d). Now what is it? As you all know that whenever company takes a secured loan, it creates charge on its assets in favor of lender. Lender means the person who is giving loan. Simple, easy, done. And that charge should be registered with ROC by filing form CHG1 or CHG9. I hope you remember. In form CHG1 and CHG9. CHG1 is for normal cases, CHG9 is for debentures. I repeat once again, CHG1 is for normal cases, CHG9 is for debentures. So if company is taking a normal bank loan or something which is secured, so for application for registration of charge will be made in form CHG1. And if company is issuing secured debenture, then in that particular situation, that the secured debenture, the charge should be registered by making application in form CHG9. But the thing is here, if it is a banking company, which company? Banking. Say for example, SBI. SBI is taking any loan from RBI. Achha, as you people know, RBI gives loan to banking company in their ordinary course of business. Yes or no? In their ordinary course of business. So if SBI has taken loan from RBI, SBI has taken secured loan from RBI. I repeat, SBI has taken secured loan from RBI. So SBI will have to keep something as security with RBI. Yes or no? So SBI is not required to register the charge. With ROC by making application in form CHG1 or CHG9. So this is the only amendment, that if banking companies are borrowing from RBI and keeping something security with RBI, then there is no need for registration of charge, because it will be governed as per RBI's rules and regulations. We need not apply Companies Act registration of charges chapter on that particular situation. Simple. So if I am a banking company, I am taking secured loan from RBI and keeping something security with RBI, then in that particular situation, there is no need for registration of charge. You just need to remember this. That's it. Simple, easy. This was the one amendment. The other one is that if company is in liquidation, if company is in liquidation, if company is in what? Liquidation. That means company did a wonderful business, and because of that, now company is insolvent. Company is insolvent and company is going into liquidation. Company is going to sell their assets and pay off their liabilities, or company is in insolvency process. Insolvency process. Okay? Company is in which process? Insolvency process. Insolvency process under Insolvency Bankruptcy Code 2016. Then in that particular situation, if company is filing CAG1 or CAG9, which is application for registration of charge, or if company is filing CAG4, which is application for satisfaction of charge, application for registration of satisfaction of charge. When company repays loan, repays secured loan, then they make application to ROC for registering satisfaction of charge in CAG4 or CAG8, which is for condonation of delay by central government. That means if company wants to rectify the register which is kept with ROC, register of charges which is kept with ROC, or if company fails to intimate about satisfaction of charge within 300 days, then in that particular situation, central company makes application to central government in form number CAG8. In form number CAG8. Yes or no? Yes or no? So in that particular situation, if company is in liquidation or insolvency and company need to file all these forms or any of these forms with ROC, then these forms will be signed by either insolvency resolution professional or a resolution professional or a liquidator or a what? Liquidator. See, whenever company is in liquidation, a liquidator is appointed. Whenever company is in insolvency, insolvency professional is appointed. And they handle all the matters of the company, and therefore forms will also be signed by such persons. Simple, easy, done. Very small amendment, very small amendment. Chapter number 6. Chapter number 6, there are two amendments. First one is, if company is taking any loan, banking company is taking loan from RBI and keeping something security, no need to register charge. Second, if company is in liquidation or insolvency, then all CAG1, CAG4, CAG8, CAG9 will be signed by either liquidator or insolvency professional. Simple, easy. In chapter 7, one very small amendment which is covered in regular lecture also, but still they have given over here. See, you people know that section 94 talks about maintenance of registers, maintenance of register of members and records. Okay. Now as per section 94, any person, first of all you need to know this, that every company maintains register of members. Every company maintains what? Register of members in form number MGT1. In form number MGT1. Yes or no? Every company maintains register of members in form number MGT1. Easy, simple. Now, if any person wants to inspect register of members, they can make application to company and they can inspect register of members. Easy, simple. I repeat, if any person wants to inspect register of members of the company, they can make application to company and inspect register of members. Yes. Whether you are existing member of the company or not, whether you are debenture holder or not, or whether you are any outsider, everyone can inspect register of members of the company which is kept at registered office of the company. Easy, simple, done. Now, the problem over here is in register of members, all details of member is recorded. So if any person will be inspecting register of members, he will also be accessing some personal information, personal data of that particular member. Yes or no? Say, for example, if I make application to Reliance Industries Limited and I tell them that I want to inspect register of members, so they will have to show me. and whenever they will show me register of members, I have access to some personal data of that particular member, which in normal situation should not be available for inspection. Yes or no? So therefore government came up with an amendment, and government said that any person who is going to inspect register of members will not be provided with address or registered address, email ID, unique identification number and PAN number. That means all these 4 details of any member cannot be inspected, See, for example, if I make application to Reliance Industries Limited and tell them that I want to inspect the register, so Reliance will give me the register to inspect, but they will not give me that data which contains address of that member, and if the member is company, then the registered address. Second, I will not have access to email ID, to UIN or to PAN, that is PAN number. Easy, simple, done, okay, fine. So I cannot inspect these 4 details of any member. Simple, easy, done. Chapter number 7 done. Easy, easy, easy. Chapter 8 very simple. Acha, I hope everyone knows section 90. Section 90, which talks about significant beneficial owner. Significant beneficial owner. Yes or no? So if I am a significant beneficial owner, I repeat once again, if I am a significant beneficial owner of a company. Easy, easy, simple. Again, if I am a significant beneficial owner of a company, so there will be investigation into my shares. And if I am found guilty, my shares will be transferred to IPF. IPF under section 125. So one new point has been added, that if restrictions are imposed on shares under subsection 9 of section 90, then those shares will be transferred. Those shares and all resultant benefit, that is any bonus shares, right shares or dividend or any sort of benefit on those shares, shall be transferred to IPF. Shall be transferred to whom? IPF. That is the only amendment over there. This we already cover in section 90. While teaching section 90, there is the last point over there, that if there is investigation into shares of a significant beneficial owner and restrictions have been imposed on those shares, and if any person does not make application to the company for removing those restrictions within 1 year, then those shares will be transferred to IEPF. Just to show you the content of section 90 subsection 9. See, as you can see over here, under section 90, see, I am in section 90. Section 90, that is investigation of beneficial ownership, that is investigation of significant beneficial ownership. In that last point we have, if there is any investigation and restriction is imposed on the shares of an investor, then those shares will be transferred to IPF under section 125. Those shares and benefit will be transferred to IPF under section 125. So amendment from chapter 8 only says that if any restrictions is imposed on shares which relates to significant beneficial ownership, then those shares will be transferred to IPF after following procedure. So that is the single point that they have added in chapter number 8. That's it. And that too under section 125 IPF. You know, IPF is a fund in which some funds are credited and some funds are debited. Some amounts are credited and some amounts are debited. So one more credit source is added, that shares which are specified under section 90, which relates to significant beneficial ownership, will be transferred to that fund, will be credited to the fund after following the prescribed procedure. Simple, easy. So till now, we have covered amendment till chapter 8. Just to give you a glimpse, very simple. In chapter 1, it was relating to small company 4 crore 40 crores. In chapter 2, it was section 16 rectification of name. In chapter 3, we cannot give private placement offer to those persons who are from country which shares land border with India except with previous approval of central government. No amendment in chapter 4. In chapter 5, there is only one amendment, that DPT 3 should be audited and should be filed on or before 30th June of each year. But in DPT 3, auditor will specify that yes, I have audited the return of deposit that is in DPT 3. Chapter 6, 2 amendment. 1, if charge is created in favor of RBI, no need of registration. Second, if company is in insolvency or liquidation, then CAG 1, 4, 9 or 8 will be signed by liquidator or insolvency professional. In chapter 7, you will get only limited details to inspect relating to register of members. You won't get PAN number, email ID, address or UIN. Easy, simple, done. In chapter 8, only one single amendment, that shares relating to section 90 can also be credited to IPF after following prescribed procedure. Now, in chapter 9, I can say there are 2-3 amendments which we need to cover. Okay. Now, starting with first amendment, which is nothing but about COVID-19. It was a notification issued by MCA on 5th May 2021, which says that if company is spending funds for creating health infrastructure for COVID care or oxygen generation and storage plants, as you guys know that when this amendment came 5th May 2021, at that point of time we were facing, I think, second wave of COVID, and COVID was at its very peak in India at that point of time, and we were facing shortage for oxygen cylinder, if you guys remember. So therefore government came up with a plan, came up with an amendment that if a company is spending for COVID related facility, oxygen cylinders and all, then also it is an eligible expenses for CSR activities. Okay? So again, there is nothing to by heart in this. You just have to read this point. Yes, if company is spending something for COVID or related to COVID-19 facility, then that expenses will be treated as CSR expenditure. Same second point and third point also, you just have to read this all relates to COVID-19 or research organizations. Yes or no? Easy, simple. See, again COVID, again if company is spending amount for Har Ghar Tiranga campaign, which was I think it started in last year or 2021, 22, 21. I don't remember exactly, but yes, 22, because the amendment is dated 26 July 22. So if company is spending some amount for Har Ghar Tiranga, then also it is eligible CSR activity. These all points are just read only points. These all amendments which came on, the first which came on 5th May 21, the second which came on 30th July 21, then 26 July 22. These all amendments are just read only. You don't have to by heart these amendments, you just have to read this. That's all. Okay. Now, the amendment which I am looking forward to teach you in this particular chapter is, for that I will have to draw something. First I'll make chart, and after that I will cover all the amendments from over here. Easy, simple, done. Achha. Now, first you need to understand that every company files financial statement. Every company files financial statement. With whom? With ROC. Okay. Every company files financial statement with ROC within 30 days of annual general meeting in form. Now, which form company usually use? Within 30 days of AGM, in form AOC4 or AOC4 XBRL, and in case of NBFC it is AOC4 NBFC, non-banking financial companies, and AS. Easy, simple, done. So every company files financial statement within 30 days from AGM in form AOC4 or AOC4 XBRL. As you guys know, some big companies satisfying certain conditions have to file AOC4 XBRL, that is AOC4 in electronic mode. There are some additional details in XBRL which company needs to show, and AOC4 NBFC, obviously it will be for NBFC. Easy, simple, done. Now, the amendment which came is that every company, the amendment was that every company, I repeat once again, every company, each and every company covered under section 135 subsection 1, that is CSR. Every company which has net worth of at least 500 crores or turnover of at least 1000 crores or net profit of at least 5 crore is required to constitute CSR committee, correct? So every company which is obliged or which is mandatorily required to comply with the provisions of CSR shall prepare annual return or say report on CSR in form CSR2, in form CSR2. Easy, simple. Now what they are specifying, what law is specifying is that this form CSR2 should be attached along with financial statement of the company which will be filed with ROC. So say for example, this is financial statement of the company, AOC4 or AOC4 XBRL etc. or AOC4 NBFC Ind AS, है ना, easy. So we will attach form CSR2, and should be filed with ROC. Okay, simple. So law is telling that if company is covered under CSR provision, then along with financial statement, company shall attach annual report on CSR, in form CSR2, and it will be starting for the financial year. 2020-21 onwards. 2021 onwards. Yes or no? Easy, simple, done. Okay, fine. So every company from 2020-21 onwards which are covered under CSR provision should prepare an annual report on CSR in form CSR2, and that annual report should be attached to financial statement which is filed with ROC. So ultimately we will file form CSR2 with ROC. Now the problem is this amendment came on 11th February 2022. I repeat, this amendment came on 11th February 2022. Yes or no? I repeat, this amendment came on 11th February 2022. Now the problem is for 2021 starts from 1st April 2020 and ends on 31st March 2021, and even if I count 6 months for holding AGM for an existing company, 6 months will end on say 30th September 2021, है ना? Say let us assume that this is the date of AGM, and from here within 30 days, within how many days? 30 days, that is till 30th October, company will file financial statement with ROC in form, which form? AOC4 or AOC4 XBRL or AOC4 NBFC Ind AS. Easy, simple, done. Now please understand the problem. The amendment came on 11th February 2022, and on 11th February 2022 they are specifying that for 2021 you should file form CSR2. By attaching it to financial statement. But how is it possible? Because company has already filed its financial statement on 30th October 2021 itself. For 2020-21, company has filed financial statement with ROC maximum by end of 30th October 21 because statutory limits are over. Because you need to understand that every company files financial statement within 30 days of EGM. Easy, simple. So therefore, MCA said that for 2020-21, don't worry, you file form CSR 2 separately. है ना? Do not attach it to financial statement. You file separately because it is not possible to attach to financial statement because financial statement has already been filed by 30th October and amendment came on 11th Feb 2021. Financial statement was filed on 30th October 2021. Amendment came on 11th Feb 22. So it is impossible to attach form CSR 2 for 2020-21 in financial statement. So therefore they are saying you need to file separately. You file CSR 2 separately by 31st March 2022. You know, you file separately for 2020-21. You file form CSR 2 separately because since it is a new provision, it will take time for you to prepare form CSR 2. So you prepare, you file till 31st March 22, not as an attachment but separately because financial statements are already with ROC. But again on 31st March 22 they came and they said that we are extending this time till 31st May 2022. So earlier they said that for 2021 you need to file till 31st March 22. Again on 31st March 22 they came up with an amendment and they said that you file by 31st May 2022. Again on 31st May 22 they came and they said okay, now you can file till 30th June 2022. You can file till 30th June 2022. So in a nutshell, they extended time to file till 31st March and then again till 30th June. So if I prepare a table for 2021, CSR 2 shall be filed separately on or before 30th June. On or before 30th June. I repeat, on or before 30th June 2022. Correct? Now, next financial year will be 21-22. 21-22. Acha, 21-22 will end on 31st March 2022. But as you can see, till 30th June 2022, we are filing form CSR 2 for 2021. We are clearing our past data now. So for 21-22 also, CSR 2 should be filed separately till on or before 31st March 2023. On or before 31st March 23. Why they have extended time for 21-22? Because in 21-22 we are filing form CSR 2 of 2021. I hope you understand. 2021 we are filing form CSR 2 of 2021 till 30th June 22. So for 21-22 I will have to again prepare, again file. So I have been provided time till 31st March 2023. Easy, simple, done, है ना? अच्छा. Now again it is not in your RTP but it has been notified in BEAR Act that for 22-23 CSR 2 again you need to file separately on or before 31st March 2024. This is something extra which I am explaining to you. This is not in your syllabus as of now, but again as a backup to explain you the entire provision, to explain you the future course of action, I have explained this point to you as well. Okay. So for 2021 you need to file CSR 2 separately till 30th June 22. For 21-22 separately till 31st March 23. And 22-23 separately again till 31st March 24. Easy, simple, easy. And I feel from 23-24 they may say that now you need to attach form CSR 2 with your financial statement because this is transition provision. When something new comes up, no, it takes time to comply. So therefore they are extending time period. So for example, ideally for 21-22 your form CSR 2 should be attached to your financial statements and should be filed along with financial statement of 21-22 in the year 22 itself. Say For 22, it will end on 31st March 22. We'll hold AGM say by 30th September 22 and 30th October 22 last day to file financial statement. So in that financial statement form CSR2 should have been attached. But since we were preparing form CSR2 of last year 2021, so therefore for current year they have extended time till next year, and then again for current year they have extended time till next year. I hope you understand why they are extending time. So in a nutshell, this amendment is nothing but you need to file form CSR2 for 2021 30th June, 21-22, 31st March of 23, 22-23, 31st March of 24. That's it. If you are covered in CSR provision. If you are covered in CSR provision. Easy, simple, done. Acha. Okay, fine. Moving ahead. Acha, please do not read this. You will get confused. I have explained to you in very clear, crystal manner. Please do not refer there. And if you want, you can go back. You can write this with me by pausing video at regular intervals. But please do not read from here. You will get confused. Very confused. Okay. Now, moving ahead. One more amendment is there. In regular lecture, I usually make sure that student rectify this date in their textbook. But still, just to make sure one more time, the amendment is in books of accounts. Where company is an option to keep books of accounts in electronic mode. Yes or no? Now, if company is preparing books of accounts in electronic mode, you all have observed that in point number 4, we will have to maintain books of accounts and use such accounting software which enables audit trail and creating edit log. So there in your textbook, you might have date 1st day of April 2021. This is old provision. Now the updated date is 1st day of April 2023. So the requirement of using accounting software which is capable of audit trail and creating edit log is now applicable from 1st day of April 23. That is from current financial year 23. Clear? Easy? Simple? If it is 21 or 22 in your textbook, please make it 23. This is second amendment. Okay? Now, next amendment with respect to this chapter is, the amendment is, when you go to books of accounts kept in electronic mode, so you shall remain accessible in India. Shall remain books of accounts. If books of accounts are kept in electronic mode, it should remain accessible in India. You just have to add accessible in India at all times. At any point of time, if you want to refer books of accounts of the company, it should be accessible in India. So this is something which you need to add. That's it. And if company is preparing books of accounts, okay, of branch office, then a summarized return periodically shall be replaced with daily basis. Yes people, yes. If company is keeping books of accounts, if company is keeping books of accounts of branch office at some other place. See, company may have their branch and company will have to prepare separate books of accounts for branch office as well. So whatever entries we are making branch records shall be transferred on daily basis to company's office, company's main office where main books of accounts are kept. So that periodical basis have been now amended to daily basis. So in books of accounts kept in electronic mode, it should be remain accessible in India at all times, and books of accounts of branch office from their summarized return should be sent on daily basis. Earlier it was periodic basis, now it will be daily basis. Easy, simple, done. Acha. Now one more amendment over here is that where the service provider is located outside India. See, very simple. When company is maintaining books of accounts in electronic form, company will have some service provider, and if that service provider is not from India, is out of India, that service provider is located outside India, then we will have to provide name and address of the person in control of the books of accounts and other books and papers in India. I repeat, if company is maintaining books of accounts in its form, electronic form, you may add one more point over here. See, in your section 128 rule 3 books of accounts to be kept in electronic mode, I am making you write one more point over here. If company is maintaining books of accounts in electronic form, and if service provider is located outside India, then name and address of person, name and address of what? Person responsible in India, name and address of person responsible in India. This will be point number E. After D, this point should be added, that if service provider is located outside India, then you have to provide name and address of a person who is responsible in India to answer the government. Simple, easy, done. Acha, these were the material amendments from your chapter number 9. Acha, two more very important amendment. In normal lecture I use this word that CR के provision एक बार लगा डाला तो 3 साल के लिए लाइफ जिंगा लाला, which means if provisions of CSR once applies, it continues to apply for next 3 years. But now it has been omitted. It means if I am in the year 23-24 and if I want to see that do I need to comply with the CSR provision, then for that I will have to see limits of 22-23. If I exceed the limit in 22-23, that is 500 crores, 1000 crores, 5 crores, then only in 23-24 I will do CSR. Now again for 24-25 I will have to see limit of 23-24. Then again in 25-26 I will have to see limits of 24-25. So whether I am supposed to do CSR or not in current financial year depends upon my limits in last financial year. So एक बार लगा डाला 3 साल की लाइफ जिंगा लाला is no more. Please, if it is in your textbook, please cancel it. If it is in your textbook. Whether I will have to do CSR or not, it depends upon the limits of last year and not of last 3 years. Simple, easy, done. So once applies, it continues to apply for 3 years? No. Once applies, it will apply for that year only. For next year, again I have to see new limits. Easy, simple, done. And as you guys know, for doing impact assessment, see, very easy. Every company whose CSR expenditure, average CSR expenditure is rupees 10 crores in last 3 financial year. That means my company's average CSR obligation. That means from last 3 financial years, I have to make sure that I am spending 10 crores. My average CSR obligation is 10 crore in last 3 financial year. So therefore, company need to undertake impact assessment. I repeat, company to undertake impact assessment, and this impact assessment will be done by independent agency. है ना? Impact assessment will have to be done by independent agency. Now this independent agency will not work for free. They will charge some remuneration from you. Yes or no? So maximum expenditure that company can do towards impact assessment. Maximum expenditure that company can do towards impact assessment. It was earlier 5% of CSR expenditure. 5% of your CSR expenditure or rupees 50 lakhs, whichever is lower. But this was old provision. The new provision which is applicable for the examination is now 5% is 2% of your CSR expenditure. Or rupees 50 lakhs. Whichever is higher. This is new provision which is applicable for the examination. for your examination. So 5% has been amended to 2% and whichever is lower has now been amended to whichever is higher. So maximum expenditure which I can do for impact assessment is 2% of my CSR expenditure compared with 50 lakhs whichever is higher. 2% of CSR expenditure or 50 lakhs whichever is higher. A yes or no? Easy, 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 done, simple. So these are all material amendment in your CA Inter applicable for November 23. Now one more very important thing is, that is something which you don't need to by heart. You just have to read that for making CSR expenditure or for undertaking CSR activity, company can do CSR itself. Company can do CSR itself. Yes or no, bachcho? Company can do CSR itself. Or company can do CSR through any Section 8 company or any registered trust or registered society which is registered under Section 12A of Income Tax Act 1961 and they have certificate of registration under ATG. ATG already know donations. So a company can undertake CSR activity through itself or through any Section 8 company or through society or trust which is registered under Section 12A of Income Tax Act 1961 and which has been recognized under ATG of Income Tax Act. Yes or no? Easy, simple. You don't need to buy it. These are all subclauses 4, 5, 6, 7, etc. You don't need to buy it. Please do not buy it. You just need to remember that company can do CSR itself or through a company under Section 8, that is Section 8 company. Company can do itself or through Section 8 company or any trust or society which is registered under Section 12A of Income Tax Act 1961 and approved under Section ATG of Income Tax Act 1961. That's it. Apart from that, company can do CSR through Section 8 company established by government or any entity which is established by Act of Parliament or State Legislature, or company can do CSR through Section 8 company, trust or society under Section 12A approved under ATG of Income Tax Act which have established track record of at least last 3 years in undertaking similar activities. All these 4 points we already cover in our regular lecture, but still since they have given in RTP, Institute's model was not amended, I'll have to explain these points again. But don't worry, we have already covered it. But again, I am repeating it for you that a company can do CSR. A company can do CSR either on its own or through Section 8 company, trust or society. Section 8 company, trust or society. Trust or society which is registered under Section 12A and approved under ATG of Income Tax Act 1961 established by company or Section 8 company or trust or society established by central government or state government or any entity established by parliament or state legislature, or company can do CSR through Section 8 company or trust or society which is under Section 12A ATG of Income Tax Act which has track record of last 3 years in undertaking similar activities. See, understand, if I am Reliance Industries Limited annually spends around 900 plus crores on CSR activities. So it is very difficult for Reliance Industries Limited to track their 900 crores. Are you getting my point? It is very difficult for Reliance Industries Limited to track their 900 crores. So what Reliance Industries does is, Reliance Industries have established Reliance Foundation. Reliance Industries has established, not directly, but now what Reliance Industries Limited does is, they give their amount to Reliance Foundation, which is again Reliance Group company. Reliance Foundation is a Section 8 company and Reliance Foundation takes care of the charity. Because if Reliance Industries will take care of charity, then who will do business? Who will earn revenue? And if we will not earn revenue, how we will do charity? So Reliance Industries Limited does the work of earning and Reliance Foundation does the work of spending on charitable activities. So usually same goes in Adani also. In Tata Trust handles all this. Yes or no? So therefore it becomes very difficult for company to do charity on their own, CSR on their own. Therefore they can do through Section 8 company, trust or society established by company, or Section 8 company, trust or society established by central government or state government, or entity or parliament or state government established by central government or parliament, any entity established by parliament or state legislature, or Section 8 trust or society which is not established by company, not established by government, not established under any parliament or state legislature, but it is random Section 8 trust or society, but they are doing charitable work from last 3 years. They have track record for last 3 years. Yes or no? Easy? Done? So guys, these were all the amendments. These were all the amendments applicable to you. Now, first, before moving ahead to the question answers part, I want to first discuss with you all the amendments. All the amendments in a nutshell. First I'll discuss only of chapter 9 because there are so many amendments. So in chapter 9, first it was from CSR 2 for 2020-21 till 30th June 22, for 21-22, 31st March 23, for 22-23, 31st March 24. First amendment. Second, if books of account are kept in electronic form, then it should be remain accessible in India at all times. Record of branch office shall be sent to registered office not on periodical but daily basis. And if company is keeping its books of account in electronic form, then we have to see whether service provider is from India or outside India. If he is from outside India, then please submit us the details of that person who is responsible in India. Easy, simple, done. This amendment. Then again, amendment in impact assessment, 2% or 50 lakhs, whichever is higher. New provision is the maximum amount that company can expend for impact assessment is 2% of CSR expenditure or 50 lakhs, whichever is higher. Earlier it was 5% or 50 lakhs, whichever is lower. Easy, simple, done. Then that CSR provision, एक बार लगा डाला 3 साल की life झिंगा लाला. That means once applies, it continues to apply for next 3 years, has been removed, has been amended. Yes or no? And company can do CSR through these organizations. Yes or no? Simple, done. So I have covered all the amendments. In chapter 1, small company 4 crore 40 crores. Chapter 2, rectification of name, section 16. Chapter 3, we cannot make private placement to a person who is from country who is sharing land border with India except with the previous approval of central government. Chapter 4, no amendment. Chapter 5, it talks about deposits. In DPT 3, auditor will give declaration that yes, I have audited. Chapter 6, 2 amendment, no need to register charge which is created by a banking company in favor of RBI. And if company is in insolvency or liquidation, then it will be CAG 1948 will be signed by liquidator or insolvency professional. In chapter 7, you will not get address of the member. You will not get email ID, PAN or UN of a member to inspect. Chapter 8, in IPF, one more new credit source has been introduced, that shares relating to significant beneficial ownership may be transferred to IPF after following prescribed procedures. And chapter 9, all amendments we have just covered. Easy, done. As you can see, almost all amendments were covered in regular lectures apart from 1 or 2. But still, since they are printed in RTP, I'll have to invest my time to explain it to you again. Okay, now moving ahead to question and answer. Now I won't take much of your time since your exams are very near. So what I will do, I will request you guys to read the question by pausing this video and I will directly discuss the answers. Okay, so please read the question. Acha, I hope you have already read the question. Okay, so we have some MCQs with us and we have descriptive questions also ahead. So we will be discussing both. Okay, so now what they are asking, the Companies Act provides that the financial statement should be approved by the board of directors, signed by prescribed authorities and submitted to the auditors for the report. So they are asking, who will sign financial statement of Bharat Sanskar Limited? Bharat Sanskar Limited, है ना? Who will sign financial statements of Bharat Sanskar Limited? Okay, fine. Now, for this question, you need to know provision of section 134. 134 talks about authentication of financial statements, that who will sign financial statement. Financial statement is signed by chairman of the company, or if there is no chairman or if chairman is not authorized, then 2 directors, out of which out of which one shall be managing director. Two director out of which one shall be managing director plus CFO and CS of the company. CFO and CS of the company. Now let us see in the question. Sagar is MD. Okay, fine. So first we'll write it down over here that Sagar is MD. Sagar is MD. Hari, Rahi, Sansar and Naam are directors. Hari, Rahi, Sanskar and Sansar or Sanskar? Oh, Sansar and Nab. Sansar and Nab are normal directors. These are normal directors. Acha, who is CFO? So Sonu is CFO and Raju is CS. Okay. Sonu is CFO and Raju is CS. Okay. So now as per section 34, who will sign? Chairman. So I don't see chairman in this company. So we'll see two directors out of which one shall be MD plus CFO plus CS. That means three persons who are compulsorily required to sign, है ना, is Sagar plus Sonu because he is CFO and Raju is CS. So we'll have to look for that option which has name of at least these three persons plus one more director should be there. One more director should be there because financial statement should be signed by two directors out of which one shall be MD. So for finding out answer, how I am going to find answer is that I will look for Sagar. So Sagar is in every option as you can see except for second option. Sagar is in every option. Yes or no? Yes or no? Acha. Then I will see Sonu and Raju. So in first option Sonu and Raju is there. In second option also Sonu Raju is there. In third option Sonu and Raju is not there. So B and C have been eliminated. So now we have to look between A and D. But again you need to understand that only one director side is not enough. There should be two directors out of which one shall be MD. So apart from Sagar, one more director should be there. So if you see first option, it will be eliminated now because it doesn't have name of another director. So therefore it will be Sagar, Sansar, Raju and Sonu. That is D option will be correct answer. Simple, easy, done. Now as per provision of company law, the board report and annexed that should be signed by two directors out of which one shall be MD. Two directors out of which one shall be MD. Again it is given under 134 board report. That board report should be signed by two directors out of which one shall be MD. So therefore option will be Sagar and Hari. Sagar is MD and Hari is normal director. Yes or no? Acha. If in the above case the company failed to file financial statement along with all documents attached to financial statement adopted at AGM with the registrar. So who will be liable for punishment? Who will be liable? So always remember, if company fails to comply with financial statements, company MD and their CFO will be liable. Company MD and their CFO will be liable to penalty. Company MD and their CFO will be liable because those persons are responsible to maintain financial statements. Yes or no? Easy, simple. And fourth, as per the provision of Companies Act, in destruction of all books of account together with relevant vouchers were not correct because, see, first of all, company has destroyed all books of accounts of 31st March 2018 in April 23. In April 23, they have destroyed books of accounts of 31st March 2018. Now, if you have read section 128, you must know that company should maintain its books of account for 8 financial year. Yes or no? So therefore, the action of company was not valid. Why? Because the books of accounts relating to period not less than 8 preceding financial year are required to be kept in good order. So correct option will be option B. Very simple. The question mainly relates to section 134, 129 and 128 of your chapter 9. Easy, simple, done. Now question 5th relates to interpretation of statutes, your favorite chapter. Now, a method of interpretation which brings into effect provisions for improving the conditions of certain classes of people who are underprivileged or who have not been treated fairly in the past. It is nothing but rule of beneficial constructions. Yes or no? Acha, 6th question, I urge you to please read this question. Acha, to give you a hint, this question relates to section number 19. Section number 19. Chalo, I'll read with you. I'll read this question with you. Okay. Win Limited bought 15 shares of Om Limited. Okay. Win Limited bought 15% shares in Om Limited in the year 2018. Now, in the year 2020, it formed a trust for its employees and donated 50% shares of Om Limited along with 10 lakh to the trust and became a trustee. Okay, fine. In 2022, what Win Limited did? Win Limited formed a trust and transferred 15% shares to trust. 15% shares of Om Limited in trust, and this trust was established for the benefit of employees. And trustee of the trust was Win Limited. Trustee of the trust was Win Limited. Please understand, in 2020, Win Limited wants to make sure that their employee receives some benefit in long run. So for giving benefit to employees in long run, what Win Limited did is, Win Limited formed a trust. They transferred their 15% shares in Om Limited to trust. Easy. And trustee is Win Limited only. Which means shares are still in the name of Win Limited because Win Limited is trustee. Yes or no? Simple. Now in February 23, Om Limited acquired 55% shares in Win Limited. Okay, fine. Now don't you think in 2023 Om becomes holding company and Win Limited becomes subsidiary company? Now the question they are asking is, can a subsidiary company hold shares in its holding company? The answer is, normally section 19 says that subsidiary company cannot hold shares in holding company. Subsidiary company cannot hold shares in holding company, but the exceptions are, subsidiary company can hold shares in holding company if it is holding shares before it became subsidiary. Before it became what? Subsidiary. Or it is holding in the form of trust, or it is holding as a legal representative, if you remember section 19. So the correct option is, Win Limited can do so as it is holding shares in Om Limited prior to becoming a subsidiary of it. Subsidiary of it. Yes or no? Yes or no? Easy, simple. Correct option will be option number D. Easy, simple, done. Acha. Then again, next question is relating to negotiable instruments. Now the date of maturity of a bill payable 100 days after sight. Oh, 100 days after sight. First you need to know this, that if it is time instrument, then the bill becomes mature 3 days after the actual date. That is, we get 3 grace days, if you remember. Yes or no? I repeat, we get 3 grace days. I repeat once again, we get 3 grace days. Simple, easy. Now, bill was presented for sight on 4th May 23. I repeat, bill was presented for sight on 4th May 2023. So from here, we will count 100 days. 100 days. If you count, 100 days will be on 12th August 2023 plus 3 grace days. Now 3 grace days will come to 15th August 2023, and student usually marks 15th August 2023, but it will be wrong answer because 15th August is a national holiday, and you guys already know that if any national holiday is there, then bill will become due one day before, earlier, preceding, one day preceding, correct? So the correct answer will be 14th August. If I add 3 grace days, it will be 15th August, but 15th August cannot be maturity date because it is national holiday, therefore it will be 14th August. Simple, easy, done. B option is the correct option. Now 8th question, again it relates to section 2 clause 52, which is nothing but definition of listed company. Definition of which company, bachcho? Definition of listed company. Now, New Age Private Limited, okay, it is a private company, fine. They have issued non-convertible debentures, okay, and directors want to get them listed. So after formalities, the privately placed debentures, non-convertible debentures, are listed on the stock exchange. Now understand, we have a private company with us which has done private placement of non-convertible debenture on recognized stock exchange, that is BSE or NSE. Recognized stock exchange, that is BSE or NSE. Now if a private company makes private placement of non-convertible debentures, then that private company is not called as listed company. It is not called as listed company, it is covered in exception. So therefore, New Age Private Limited shall not be considered as listed company. It cannot be considered as listed company. Easy, simple, done. Now, point number 9. Acha, you may find point number 9 relating to Companies Act, but actually it is not. It is related to General Clauses Act 1897. General Clauses Act 1897. Under that, section 26. Section number क्या है? Section number 26, which talks about double jeopardy. Double jeopardy. Jeopardy. I hope you know this. Acha, if you don't know, let me tell you. A person cannot be prosecuted twice for the same offense. A person cannot be prosecuted twice for the same offense. That means if I have done any offense which is punishable in both the acts, in two different acts, if I have done any offense which is punishable under two acts, then I cannot be punished twice for the same offense. Correct? So I would request you to please pause video and read this question first. Please read this question. Done? Now, I hope you have read this question. Now, coming to option. See, as you guys can clearly see, Mr. Shah is punishable under 447 of Companies Act as well as section 417 and read with 415 of Indian Penal Code. So, here they are asking us to please choose the correct answer, correct and most appropriate answer. So, Mr. Shah shall be liable to prosecute under both, which is wrong, cannot be prosecuted twice. Mr. Shah shall be liable to prosecute under both, wrong. Mr. Shah shall be liable to be punished under either of the act. Achha, D will be wrong, so C option will be correct option. C option will be correct option. He can either be prosecuted under Companies Act or under Indian Penal Code. Easy, simple. Now, which are Vimarsh Limited? 10th question. Which are Vimarsh Limited called its annual general meeting on 20th September 2022 to consider and adopt financial result as of 31st March 22. Okay, so they are holding their AGM on 20th September, but it was adjourned due to want of quorum and the actual meeting was held on 27th September. They are asking what is the last date to file annual return. So AGM was held on 27th September. So annual return is filed within 60 days of AGM. Annual return is filed within 60 days of AGM. So 60 days from 20th September. Yes or no? 60th day from 20th September 22. Easy, simple, done. Yes or no? Yes or no? Easy. So these were the MCQs, simple MCQs. If your provisions are very clear, if your concepts are clear, you won't be facing any doubts in these MCQs. Apart from that, we have 10 more questions with us, which is descriptive question and very easy question. Now the first question, question number 11, first question of descriptive, RTP's 11th question. I hope you have no doubt in this at least. Okay. Now 11th question, the paid up share capital of Golden Shoes Limited is 25 lakh divided into 2,50,000 shares of 10 each. Now, some of the shareholders holding 2,500 shares are resident of London for whom a foreign register of shareholders is opened thereat on November 1, 2022. Okay, so foreign register has been opened on November 1, 2022. Okay, fine. Now, advise Golden Shoes Limited. You people who will be going in their boxers to give their examinations, you are going to advise. Who don't know about their future only, you are going to advise. Okay, fine. Advise. Sometimes we need to advise. Kabhi-kabhi gyan dena padta hai. Yes. So advise Golden Shoes Limited with how much time after opening of foreign register it is required to file with ROC a notice of situation of the London office. Now again, this section relates to section number 88 of Companies Act 2013, which talks about that company should keep its register of members in form MGT1 and debenture holders in MGT2. Yes or no? Register of members, that is shareholders in MGT1 and debenture holders in MGT2. Clear? But whenever company is opening its foreign register, it should intimate to ROC the place where such foreign register has been kept within 30 days in form MGT3. Company should intimate to ROC. I repeat, company should intimate to ROC. In which form? MGT3. Within how many days? 30 days from opening foreign register. So company has opened foreign register on 1st November. So 30 days from 1st November. In which form? MGT3. As you can see over here, section 88, Foreign register, yes or no? 30 days from 1st November. I hope it is very clear. Very easy question, Pappu question. Now, moving ahead to question number 12. Satvikya Private Limited was formed on 25th April 2022. Okay, fine. General information, company is formed on April 22. Now, when the company was formed, it had provided in its article that company shall not be permitted to accept or keep advance subscription or call money in advance. Okay. So, company is not allowed to keep calls in advance. Calls in advance. Yes or no? Okay, fine. Now, if you have read section 50, which talks about calls in advance, it is clearly specified over there that a company can accept calls in advance only when there is authority in articles of association. Only when there is authority in articles of association. So that means if my articles allow, then only I can accept calls in advance, otherwise I cannot accept calls in advance. Easy, simple. However, in the August 23, the need was felt to amend the articles with respect to retention of calls in advance. Okay, need was felt. Okay, fine. No worries. Need was felt. Okay. Decide whether the provision inserted in the articles at the time of formation of company can be considered void. Now, they are not asking you that how company is going to alter its article. They are not asking you that whether company can alter article and keep calls in advance with themselves. They are only just asking that when company was formed in 2020, the provision that company had inserted regarding that company will not be allowed to retain calls in advance, was that void? The answer is no, it was valid. It was valid. See, section 50 specifically says that company can provide in its articles whether they want to retain calls in advance or not. So, if my company is specifying that you cannot retain calls in advance, that is valid. That is not void. That is valid. Yes or no? Simple. And if you refer to section 6, section 6 says that Companies Act can override MOA and AOA. Companies Act can override MOA and AOA. But again, if any section of Companies Act is itself referring to MOA and AOA, then in that particular situation will follow MOA and AOA. So section 50 says that company can keep calls in advance provided it is given in AOA. So in such situation, AOA will override section 50 because section 50 is itself referring to AOA. Yes or no? So it was not void, it is valid. It is valid. If you see answer, section 50 they have given reference, section 6 they have given reference, and at the end of the answer they have written that in the articles of association will prevail and cannot be considered void. That means whatever provision companies had kept in their AOA, it was valid. It was valid. Simple, easy. Now moving ahead, question number 13. Now since it is a big question, I want you to please read this. Pause and read this. I hope you have read this. Simple. So now, just to give you a summary of the question, Mr. Vaibhav has shareholding in two companies. One is Subhas Limited, another is Nidhi Limited. In Subhas Limited, dividend was declared on 25th August. Amount is 800 and it was paid on 23rd October 2022. And in Bandol Nidhi Limited, that is dividend was declared on 4th September. Amount was 100 rupees and dividend was not paid within the stipulated time. Easy. Now, Mr. Vaibhav also holds 100 cumulative preference shares of 1 lakh in aggregate of Jipanti Limited, on which dividend payable is at the rate of 8% per annum. However, during the financial 21-22, Jipanti Limited did not earn any profits. Okay, fine. Now the question is, what could be the punishment to the companies aforesaid in the table with respect to delayed payment of dividend? Now, if you have read section 127, which talks about that at any point of time, if company declares dividend, it should pay within 30 days. It should pay within how many days? 30 days. So company has declared dividend 25th August. It should pay dividend by 26th August, 27, 28, 29, 30, 31st August, 6 days and 24 there. So it should pay dividend by 24th September 22. Last date to pay dividend. 30 days. Yes. If company defaults to pay dividend within 30 days, then company will have to pay interest at the rate of 18% per annum for the delayed period. 18% per annum. So now, if I see company has actually paid dividend on 23rd October. So that means company, can I say company is late? Company is late by 29 days. If you count after 24th September, that is from 25th September onwards till 23rd October, company is late by how many days? 29 days. And the amount is 800. So therefore calculation will be 800 into 18% into 29 days divided by 365. So if I calculate this amount, it will be somewhere around 11 rupees. Somewhere around 11 rupees. Yes or no? Yes or no? So the company will be punishable. Company will be punishable in first case of Subhas Limited, 11 rupees interest. Company will have to pay 11 rupee interest. See, they have given the calculation. Will pay 11 rupee interest. Simple. Now regarding Nidhi Limited, Bandol Nidhi Limited, if you have read section 127 clearly, in case of Nidhi company, if a dividend payable to any shareholder is up to 100 rupees, then in that case, Nidhi company will not pay dividend themselves to the investor. Nidhi company will only publish advertisement in local newspaper, and they will display on notice board for 3 months. So in case of Nidhi company, dividend is not paid within stipulated period. Okay, fine. But company will not be liable for punishment if company has printed in one local newspaper and company has displayed on notice board for 3 months. If those two requirements have been fulfilled, company will not be liable for punishment. In 127, see, they have given over here. Nidhi company, dividend payable is 100 rupees. So it is sufficient compliance if it is announced in one local newspaper and notice board for 3 months. Accordingly, if the aforesaid compliances have been made, company is not liable for punishment. Otherwise, it would be liable for punishment. Simple. Now, the second question that they have asked is whether Jipanti Limited is required to pay dividend on cumulative preference shares. Yes, beta, yes. See, simple. Jipanti Limited does not earn any profit for 21-22. It's okay. Since the preference shares are cumulative preference shares, whatever dividend will accumulate of 21-22 will be carried forward to 20-23. Yes or no? So if company has not paid dividend 21-22, they will have to pay in 22-23 because it is cumulative preference shares. Dividend gets accumulated till it is paid. Easy. I hope you understand. This is very, very nice question. It covers so many concepts. It covers concept of dividend as well as cumulative preference shares. Chapter 8 and chapter 4 together. Easy? Done? Now, moving to question number 14. Yellow Private Limited. Okay. Yellow Private Limited is engaged in the business of manufacturing premium quality rattle toys. Okay, fine. They are giving just general information to us. They have a huge market for their toys all over India. Wow, huge market all over India. Okay, fine. The company has appointed its auditors for the financial year 22-23 and it was signed with a clause that fee to be mutually decided. How fees will be decided? So now directors have approached to you seeking your advice. Again, they are asking for your advice. Okay, fine. For the provision related to remuneration of auditors. Again, if you see, this question is from chapter 10, which talks about section number 122, remuneration of auditors. Now, auditors' remuneration is decided in general meeting. In general meeting of the company. Or in general meeting, it may be decided that how remuneration will be fixed. In general meeting, it will be decided that how remuneration will be fixed. Yes or no? Easy. So that is the answer of this question. Not kidding. See. Section 42 of the Act provides for remuneration of auditors. According to the section, the remuneration of auditors of a company shall be fixed by the company in general meeting or in a manner as the company may determine in general meeting. That is the answer. Simple. That is the only answer which the institute is expecting from you. Simple, easy, done. Now, moving, very simple, remuneration of auditors. For a change, they have asked question not from disqualification of auditors, but from remuneration. Otherwise, always they ask question from whether this person can be appointed as auditor or not. But for a change, they have asked question from some other topic this time. Now, 15th question. Shree Limited. Okay, fine. We have a company called as Shree Limited, has an authorized capital of 10 lakh equity shares. Authorized capital. Fine. Some of the shareholders express their opinion. Each share has face value of 100 rupees. Fine. Now, some of the shareholders express their opinion in annual general meeting that it is very difficult for them to trade in the shares of the company in stock market and requested the company to reduce the face value of each shares to rupees 10 and increase the number of shares to 1 crores. Okay, fine. Examine whether request of shareholders is considerable as per the provision of Companies Act. Now, company can subdivide the face value. we also call it as stock split. I hope you have heard. Your CA inter student going for your examination in coming month. You must be know what is stock split. You must have knowledge of all these kinds of concept. It is in our syllabus also. In practical life, if some of you follow stock exchange, stock market, you may be knowing that company usually involved in stock split. Few years back, ITC did their stock split. They divided their one share having face value of rupees 10 into 4 shares of face value of 2.5 each. So stock split is allowed. Now stock split under Companies Act is allowed under section number 61, where company can alter its share capital, and they can subdivide shares by keeping the overall amount same. Correct? Say for example, 10 lakh equity share of 100 each will be 10 crores and 1 crore equity share of 10 each will be again 10 crores. So overall amount is same. And company can alter its share capital as per 61, provided you satisfy the condition. The condition is there should be authority in AOA, plus company shall pass ordinary resolution, plus company shall inform ROC. Company shall inform ROC about alteration of share capital in section 64 in form SH7 within 30 days. Within how many days? 30 days. Yes. So request of shareholders can be considered by company, and if company wants to do, company will have to make sure that they are following section 61. There is authority in articles of association. Company has passed ordinary resolution, and company will have to inform ROC within 30 days in form SH7, and it is written under section 64 that company will have to inform ROC. Easy, simple, done. Very easy question. Question number 15. Very easy question. It relates to share capital chapter, section 61. Section 61 is also given in chapter 2 in alteration of MOA capital clause, 5th clause, capital clause. Okay. Moving ahead to question number 16. Okay. A limited company raised the secured deposit of 80 crores. Okay. Secured deposit, that means some security has to be created. Fine. On 30th June 23 from the public on interest of 12% per annum repayable after 3 years. So maturity is 3 years. Charges have been created in the favor of deposit trustee. Land and building 55 crores, plant and machinery 15 crore, factory shed 10 crores. Acha. Trademark 10 crore, goodwill 15 crore. Decide the validity of charges created. Okay, fine. First we need to see that principal amount is 80 crore rupees. Interest is 12% per annum. So if I count 80 crores into 12%, 80 crore into 12%, it will be somewhere around 9 crore 60 lakhs interest of 1 year. 9 crore 60 lakh of 1 year into 3 years, it will be somewhere around 28 crores 80 lakhs plus 80 crore principal, and 28.8 crore is your interest. Total repayment value will be 108.8 crore. Yes or no? Yes or no? Easy, simple, done. Now, the provisions of deposit chapter says that you need to create security in favor of deposit trustee up to an amount which is sufficient to cover principal as well as interest. That is entire repayment amount. Yes or no? Yes or no? But the problem over here is you can create security only on tangible assets and not on intangible assets. It is given specifically in deposit chapter. Just to show you. If we come to chapter number 5, I think it will be in rule 6 if I am not mistaken. It will be in rule 6. Security, creation of security. Creation of security. See, every company inviting secure deposit shall within 30 days from the date of acceptance provide for security by way of charge on its assets by way of mortgage or hypothecation only, and it may be noted that the company shall ensure that total value of security either by way of deposit insurance or by way of charge or by both on company shall not be less than amount to be accepted and the interest payable thereon. So we'll have to cover amount of deposits also and interest also, correct? And security should be created only on tangible assets. Only on which assets, beta? Tangible assets. security cannot be created on intangible assets. I repeat, security cannot be created on intangible assets. Yes or no? Company cannot create security on intangible assets. Okay, fine. So that means will it consider 55 crore will be valid? Yes. We can create charge on land and building. We can create charge on plant and machinery, factory, shed. But we cannot create charge on trademark and goodwill because it is intangible. So therefore total value is 55 plus 15. It will be 80 crores. Can I say it is not sufficient to discharge the repayment value of deposits? So therefore total value of security is less than the amount of deposit accepted and interest payable thereon. Hence the charge is not validly created. Simple, easy, done. Company will have to create charge on tangible asset and not on intangible assets. Easy, done. Now all questions of Companies Act have been done. Moving ahead to other laws, only 4 questions we are left with. Acha, first of all, we'll first see question from interpretation of statutes. Acha, again very simple question. We'll have to just explain without prejudice. And it is nothing but direct question. Without prejudice means without going against any provision. See, they have given their answer directly over here. Very small answer. Without prejudice. Again, I always say that interpretation of statutes and general clauses act are bonus chapter for students because they will be mostly asking you direct questions only. Okay. Now, again, then we'll go to General Clauses Act 1897. Please read this question. First pause, read and try not to laugh. First read, pause, read and try please not to laugh. Okay, I believe you have paused, you have read the question. What kind of question is this they are asking? I don't understand. In section 166 of Companies Act, it is written that director of a company shall not achieve or attempt to achieve any undue gain and to himself or his relative, and if such director is found guilty, he shall be liable to pay an amount equal to that gain. Okay. So now Neelu Chandra is saying that she will not be punishable because she is not he, she is she. Neelu Chandra is saying that section 166 is only applicable for males and not for females. Since she is female, this section will not be applicable to her. Can I say? Neelu should read General Clauses Act 1897 first, and that too section 13, which says that masculine gender includes feminine gender, which means in law wherever he is written it will include she. He shall include she, that is masculine gender includes feminine gender. But not in all cases, because there are some act in India, which is only for females, or there are some act which is only for males. So there in such cases, for example, Maternity Benefit Act 1961, Maternity Benefit Act 1961, in that situation she will only include she. She will only include she. There she will not include he or he will not include she. Correct? But here in normal situation, masculine gender includes feminine gender. Yes or no? Easy. So is Neelu Chandra punishable? The answer is yes. Funny question. Funny question. See, section 13 of General Clauses Act, masculine gender will include females also. Easy. So she will be punishable. Acha. Now, please now read question of Indian Contract Act 1870. Please pause the video, read, and then I'll explain. I hope you have read. Now, see, Sanjeev is dealing in high quality timber. Okay. So Sanjeev is seller. Sanjeev is seller. And Amit wants to purchase. Amit wants to purchase. Common name, it is used everywhere. Amit wants to purchase. So Sanjeev is seller. Amit is buyer. Acha, Amit wants to purchase on credit. On credit. Udhar. On credit. Okay, fine. And Pramod has given guarantee to Mr. Sanjeev. So Amit is purchasing timber on credit, and whether Amit will make payment or not, the guarantee is given by Pramod. So we have 3 parties over here. Sanjeev is creditor, Amit is principal debtor, and Pramod is surety. Yes or no? Okay, fine. Afterwards, Mr. Amit embarrassed and contracts with creditors, including Mr. Sanjeev. So Mr. Amit contracted with all his creditors, including Mr. Sanjeev, to assign to them his property in consideration of their releasing him from their demand. Okay, fine. So what Amit did is, somehow Amit became bankrupt or he became insolvent or anything of that sort, and he's not having money now. He's not having money now. Who? Amit is not having money now. So what Amit did? Amit said to all his creditors that please come here, take my property and please release me. Do not ask any amount from me. Please take property. Please take property. Do not ask any amount from me. Oh, okay, fine. That means Amit also gave property to Sanjeev, and now Sanjeev will not claim anything from Amit because Sanjeev has accepted property from Amit in place of his repayment of loan. Yes or no? So Amit is discharged. So principal later discharged. So surety is also discharged. Correct? Now, later on due date, Sanjeev filed the suit against Mr. Pramod for recovering his due. How can he file against suit against Mr. Pramod? Because he cannot claim anything from Amit, and therefore he cannot claim anything from Pramod, because liability of surety and principal debtor is coextensive. That means surety will be liable for that amount to which principal debtor is liable. And if you closely read section 134 clearly states of Indian Contract Act that surety is discharged by any contract between creditor and principal debtor by which principal debtor is released, and the legal consequences of which is discharge of principal debtor, and on the basis of above principle, Mr. Sanjeev cannot claim payment from Mr. Pramod. Very easy, because there was a variation in contract between Sanjeev and Amit. Pramod is not liable. Simple, easy, done. Now coming to your last question, the Negotiable Instruments Act 1881. Please pause and read the question, then I'll explain. Okay, I hope you have read the question. Now, Mr. Vibhav made endorsement of bill of exchange of 35,000 to Mr. Rishabh. Okay, now Mr. Vibhav has endorsed bill of exchange. Okay, endorsed bill of exchange to Mr. Rishabh. Okay, fine. Mr. Vibhav has endorsed bill of exchange to Mr. Rishabh. Fine. But before the same could be delivered to Mr. Rishabh, Mr. Vibhav passed away. Oh. See, for endorsement, two things are very important. One is signature of endorser and the other one is delivery. Endorsement will only be complete after it is signed and delivered to endorsee. Until it is delivered, it is not complete. Correct? So Vibhav, before delivering bill to Rishabh, passed away. He died. Then Mr. Somesh, who is son of Vibhav, who was only LR, that is legal representative of Vibhav, approached Mr. Rishabh and informed about his father's death. Okay. So Vibhav's son, that is Somesh, informed Rishabh that father is no more. Now Mr. Somesh is willing to complete the instrument which was executed by his deceased father. Can he do so? The answer is no. Because for an endorsement, there should be delivery. And since Vibhav is no more, he cannot deliver something because he is not there only. If Vibhav will deliver anything to Rishabh, Rishabh will go bhoot, yes or no. So Vibhav cannot deliver anything to Mr. Rishabh because Vibhav is no more. So therefore endorsement cannot be completed and LR cannot complete endorsement. LR cannot complete endorsement of the same instrument. See, please, section 57 is triggered over here. That according to section 57 of Negotiable Instruments Act 1881, the LR of a deceased person cannot negotiate by delivery only. A promissory note, bill of exchange or check payable to order and endorsed by deceased but not delivered. He cannot do so. LR cannot do so. So therefore a legal representative cannot complete the instrument if the instrument was executed by the deceased but could not be delivered because of his death. What Somesh can do, Somesh can execute a new bill of exchange in favor of Rishabh but cannot endorse the same bill of exchange which is incomplete because delivery has not been done yet. Correct? Easy, simple, done. And with this, your discussion of RTP is over. I have covered all the amendments of your 10 chapters of Company Act. Obviously, there are no amendments in other laws. And I have covered all the questions given in your RTP. Apart from that, one more important advice for you guys. Normally, students find it difficult to by heart section of other laws. Don't worry. Whatever sections you can by heart, whatever important sections you can adopt, you adopt that. Learning entire sections of other laws is not possible. But please make sure that you are not leaving it without trying. At least try. Try to remember important sections. For example, you are remembering 124 indemnity, 126 guarantee, 148 bailment, 172 pledge, 186 agency. Yes or no? So likewise, you can remember some important sections so that when you are writing answers in exam, you can present your answer in a good way. And regarding company deck, please try to grasp more and more sections so that you can present your answer, you can deliver good content in examination. Correct? Easy. So company deck, please try to remember all sections. In other laws, please try to remember as many important sections as you can. है ना? Please do not give up. There is very less time for your examination, but I believe you have prepared nicely. All the best for the examination, guys. Thank you so much. Goodbye. Take care.